Benedict and my fellow peers. Today, my team and I, Isa and William, will be giving a presentation on about group lending presentation. Our principal company is Southwealth Limited, and the competitors are Commonwealth Securities Limited, Comply Fintech Solution, and Westpac Banking Corporations. Next. Southwealth is an Australian online brokerage platform that offers a low-cost, flat-fee trading service to retail investors. It's founded in 2012, and that platform aims to democratize investing by offering access to the same tools and data used by professional investors, but at a fraction of the cost. Southwealth's key differentiator is its community forum, which allows investors to share insights, discuss investment ideas, and ask questions to other investors. Next. As it can be seen, Southwealth borrowing increased from 2020 to 2022, and there are several risk factors that could influence the company's borrowing activities, including the changes in interest rate, changes in market condition, growing opportunities, and changes in the company's financial position. It is also important to note that the COVID-19 pandemic has also had a significant impact to the economy and financial market, which could have been affected the borrowing activity of Southwealth. As it can be seen, the company is experiencing growth and expansion. It may need to borrow more money in order to fund its operation and investment, or on the other hand, if the company is experiencing financial difficulties, it may need to borrow money to manage cash flow and avoid defaulting on its debts. Next, the comparative analysis. Looking at the brand portfolio of the company, Southwealth brand portfolio is focused on providing a range of tools and resources that empower investors to take control of their financial future. It also offers a range of educational resources and research tools. CommSec, on the other hand, is focused on providing a wide range of investment and trading services, including online trading, margin lending, and wealth management. It is also well known for its strong brand recognition. Comply is focused on providing technological solutions that help companies stay up to date with regulatory requirements, streamline compliance process, and reduce compliance costs. Westpac is focused on providing a comprehensive financial service to individual business and institutional clients, and well known for its strong brand recognition as well. Their service range. Southwealth platform allow investors to trade stocks, ETFs, and options online with no account minimum or inactivity fees. And CommSec service range is designed to cater to a wide range of investors from beginners to experienced traders. Comply is focused on providing a compliant and regulatory technology solution to companies and help business to manage regulatory requirements, reduce compliance costs, and streamline compliance process. Westpac is designed to provide a comprehensive financial service to individual business and clients. Their market presence. Southwealth is relatively a new player in the Australian financial services industry and is launched only in 2012. And as of March 2021, it has over 100,000 active users and over 9 billion in funds under management. CommSec is a well-known Australian online brokerage platform, having been in operation since 1996 and has a significant market share in the Australian online brokerage with over 1.3 million active users. Comply is a compliance and regulatory technology provider that serves business across a range of industry, including financial service and healthcare. It has been in operation since 2012 and has quickly gained popularity among businesses, which serves over 1,000 active users across Australia and New Zealand. Westpac, on the other hand, is Australia's largest bank with a significant market share in the banking, wealth management, and financial service sector. And as of 2020, the Westpac had over 40 million customers across Australia and New Zealand. Looking at the business segment, as demonstrated in the chart, market share can also be interpreted in relation to the amount of revenue earned and stock market valuation of the year 2022. Southwealth and Comply may have a larger market share in terms of revenue and CommSec, and Westpac may have a larger market capitalization than Southwealth and Comply. Southwealth and Comply are relatively newer and more specialized companies that may have been able to focus on a specific niche and market segment with the online brokerage industry, allowing them to gain a larger share of the particular market and will be able to offer more competitive pricing. On the other hand, CommSec and Westpac are larger, more established financial institutions that have been in the industry for a very long time, and they have been more diverse range of products and services which could lead to a larger market capitalization. Next. Looking at the SWOT analysis of Southwealth, one of their main strengths is low fees. It charges a flat rate for brokerage services, which is significantly lower than any traditional brokerage firms charge. And another key strength is its community-driven platform. It allows investors to connect with like-minded investors, share investment ideas, and collaborate on investment strategies. Their primary weaknesses is its limited investment options. It offers a range of investment options, including Australian and international shares. Another weakness is the lack of educational resources. While the platform provides access to market news and analysis, it does not provide comprehensive educational resources such as webinar or tutorials or help them to know how to invest. Opportunities. One significant opportunity is its growing interest in passive investing. Passive investing, which involves buying and holding a diverse portfolio of low-cost index funds or ETFs that have increasingly become popular among retail investors. Another opportunity is the rise of smartphone and mobile devices. More investors are seeking of mobile trading platforms that allow them to manage their investments on the go. There are threats. One of the significant threats is the presence of established, well-funded competitors in the online brokerage services. These competitors have strong brand recognition and well-established customer base. Another one is the face of threat of cybersecurity and data breaches. As an online platform that stores sensitive financial information, Self-Wealth is a target of cyber criminals who seek to steal data or gain unauthorized access to investors' accounts. Next, I'll be passing on to William.
Thank you, Kubrick. I'm William, will be presenting security. Cash and cash equivalent. Currently, the company faces a loss of 6.3 million and 3.6 million of cash outflow. They are forecasting in the upcoming years they might be continuing ongoing concern situation. The board has prepared financial big statement based on going concern. There have been planned that cash flow can be utilized up to 12 months and are require new fund to inflow. Trade and other receivable. Their receivable has been increased to 587,000. One receivable has been increased. It will affect the company faces high risk situation. Currently, financial may lead to bad debt and company may face going concern. However, the board has been analyzed the financial based on the 12 month. They are managed to repay debts and loan due before the deadline. Safe lending margin. Next slide. The higher the LVR, the easier the asset to be disposed of and more stable, such as cash and cash equivalent and plant and equipment. Self-Wealth company's security value is at 12.9 million. With that, company is entitled for a new capital loan. Thank you.
Thank you, William. Now I'll explain about the financial analysis ratio. Self-Wealth had the second highest ratio, current ratio in 2020 at 3.504, followed by Comply in 2021 at 5.814. It shows that the business current assets are sufficient to satisfy its short-term liabilities. This would imply that the business has enough liquid assets to cover its immediate obligations. Other than that, current ratio for Self-Wealth decreased each year because of increase in current liabilities. Next is debt to debt equity. Self-Wealth in 2020, the debt to debt equity ratio is the lowest among the other 2 years at 0.424. This suggests that the business might be more financially secure and less dangerous. The company may have a cautious financing strategy if its debt to equity ratio is modest and it does not substantially rely on borrowing to support its operation. Next is return on equity. Self-Wealth has the lowest ROE, which indicates that its management is less effective than the other of the firms in turning a profit. This is due to Self-Wealth's loss-making performance from 2020 to 2022. This shows the serious impact of the pandemic by showing a drop in earnings. Next is financial leverage. Self-Wealth and Comply have the best possible financial leverage, which is beneficial for their respective companies. This is because an increase in equity in either firm will result in both organizations reaching their maximum potential for financial leverage. Next is return on assets. Self-Wealth has a negative rate of return over the course of the 3 years due to Self-Wealth experiencing losses. This demonstrates how purely Self-Wealth management manage its use of financial resources. Next, for next profit after tax, Self-Wealth was able to cut the loss by 2,314,987 million. But in the year 2022, the losses that were incurred climbed again and were more than in the previous year. This is due to the fact that in 2022, the company's operating expenses went up, which in turn led to an increase in the loss. Next, for account receivable turnover, Self-Wealth has a higher ATR than Comsec and Comply. This demonstrates that they have trustworthy customers who make debt payments. Increase of ATR in 2020 and 2022 due to higher revenue and lower average accounts receivable respectively. The average account receivable increased in 2022 despite an increase in sales, which contributed to the ATR rise. Thank you.
Thank you, Izzat. Recommendation. First way out. Company is faces with poor management on accounting. Its forecast may lead to growing concern, and due to Australian government rises multiple times of BLR. Other way to overcome this problem is to increase the date of receivable collection and increase their marketing to attract new user. Second way out. Once the primary repayment is due to pay, the company may dispose of intangible assets such as patent, company software program, or raise share purchase plan to attract new fund of inflow. Thank you. Izzat.
So the 5 C's. Character. Rank 13 in Australia investing company. revenue rising every year. Trading platform is 237 million users. COVID-19 is not affected and 16 times share risen from 0.05 to 0.80 AUD. Next is capacity. Prepare financial based on 12 months. Cash flow is able to repay loan on time. Capital. Strong balance sheet between 2021 and 2022. Strong cash and cash equivalent is 11.5 million. Overcome problems with disposal of intangible assets, plant and equipment will be collateral for future use. And lastly, condition. Australia BLR has been rising multiple times. Company unable to perform well due to market and user condition. Currently,
Thank you, Izzat. Ausman Z score. This is a formula and is used to check whether the company went bankruptcy. If the rating is above 2.99 green zone, above the company will be financially stable. Whereas if the company is below 1.8 red zone, it means the company may be face financial hardship. Self company is at 2.350 score, which is a gray zone, which indicates that the company may face going concern situation soon. And every investor should be aware of this situation. Thank you, Izzat.
In conclusion, Sapphire can loan 8.5 million from the bank. And if the Sapphire cannot pay the debt, there is a second way out to repay the loan, which issue more ordinary shares, dispose of intangible assets, and raise share purchase plan. In addition, the Altman Z score of 2.35 indicates that Sapphire is in the gray zone, and it shows that Sapphire has a possibility of being bankrupt. So finally, while making a loan decision, a bank should take into account a variety of criteria. Thank you.